Welcome to the Explainer. Today, we're going to break down something absolutely crucial for any business that makes unique stuff. How do you figure out the true cost? Whether it's a custom-built table or a brand new app, getting that price right can literally make or break you.
So let's just start with a question. Have you ever wondered how a carpenter figures out what to charge for a custom bookshelf, or how a web designer quotes a brand new site? Every single project is different. You can't just slap a standard price tag on it. There has to be a system, right?
Well, there is, and it's an accounting method called job costing. At its core, it's just a way to meticulously track every single cost, like the wood for that bookshelf, the hours the carpenter puts in, and then assign it directly to that one specific project or job. Now, think about how different this is from a company that makes, say, thousands of identical cans of soup. They use something called process costing, where they basically just average out the total factory cost over all those cans. But with job costing, no way. There's no averaging. Every single job's cost is built from the ground up, all on its own. Okay, so here's our game plan. We're going to do a quick refresher on what job costing is. Then we'll walk through the 6 essential steps to get it done. After that, we'll get into the nitty-gritty of calculating the total cost, see how you track jobs that aren't even finished yet, and finally, how you put it all together to set the perfect selling price. So first things first, let's get crystal clear on exactly when this method is the right tool for the job. And really, the crucial point is this. You use job costing when your products are heterogeneous, which is just a fancy way of saying that each one is different from the last. Think about a construction company building a custom house, or an auto shop repairing a specific car. Every project is its own unique little world. All right, let's get into the actual process and see how this all comes together. Think of this as the blueprint that businesses follow to get from just a pile of receipts and expenses to a final profitable price. Now, the whole thing really boils down to these 6 key steps. And listen, don't get hung up on the jargon here. Things like apportionment. The big idea is that the first bunch of steps are all about gathering up those general factory costs, like rent and electricity. Then you find a smart, fair way to divide them up, which lets you calculate the total cost for one specific job, and finally set that selling price.
Okay, now we're going to focus on the core calculation. This is really the heart of job costing. It's where the magic happens, and we actually see the total cost of a project start to take shape. And you know what? It all comes down to this really simple formula. You take your direct materials, so the actual raw ingredients, you add your direct labor, the hands-on work, and then you add in a fair share of all the factory's overheads. Those 3 things together, that's it. That's your total job cost. But wait a second. How do you fairly divide up costs like the factory's rent or the electricity bill across a bunch of totally different jobs? Well, the key concept here, as our source material puts it, is absorption. You've got to find a way for each job to absorb its fair share of those general costs. And the way we do that is by creating something called a predetermined rate. So before the year even gets started, a company will estimate all of its overhead costs, and then it'll pick a logical way to spread them out, like maybe based on the number of hours someone works on a job or how much material it uses. For instance, a super common way to do this is to link overheads directly to labor. So a company might figure out that its total overhead for the year is going to be, say, half of its total labor bill. And from that point on, for every single job, it just applies an overhead charge equal to 50% of that job's labor cost. It's a really simple and logical way to keep things consistent. Okay, theory is great, but let's actually see this in action. We're going to walk through a quick and clear example straight from our source material to make this real. All right, so for this project we're calling Job 1, we've got our direct costs right here, $40,000 in materials and $30,000 in labor. And this company has already done its homework. It's figured out that its overhead rate is 50% of the direct labor cost. So the very first step is to calculate that overhead. And it's just simple math, right? 50% of the R30,000 labor cost is R15,000. That's the slice of factory rent, electricity, and all those other general costs that Job 1 needs to carry on its shoulders. And that brings us to the final calculation. We just add everything together. You take the R40,000 in materials, plus the R30,000 in labor, plus our calculated overhead of R15,000, and boom, you get a total job cost of R85,000. Simple as that. But life isn't always that neat and tidy. What happens at the end of the month or the end of the year when some jobs are finished and delivered, but others are still being worked on?
Well, this is what accountants call work in process. And if you think about it, these projects have real money tied up in them. Materials have been used, people have been paid, but they haven't made a single penny in revenue yet. A huge advantage of job costing is that it makes tracking the exact value of these unfinished goods incredibly easy. And this slide gives us a fantastic snapshot of what's happening on the factory floor. We're tracking 4 different jobs all at once. You can see the total costs that have piled up for each one, but more importantly, look at their status. 3 jobs are complete, but job 644 is still incomplete, and it has R5,000 in costs tied up in it so far. All right, we've made it. Let's look at the absolute last piece of the puzzle. We've gone through all this work to calculate our cost. Now, how do we turn that number into a price for the customer that actually makes the business some money?
Well, once you have that total cost number, the final step is actually pretty straightforward. You just add your desired profit, and that's usually done with a simple markup percentage. So let's say after all of our calculations, we figure out a custom desk costs are $250 to make. If the business wants to make a 30% profit on its costs, it just calculates 30% of $250, which is R75. Add that right on top of the cost, and you get your final selling price, R325. So what's the big takeaway here? Job costing isn't just some boring accounting method. It's a tool for survival. For any business out there creating unique things, it's a clear blueprint that makes sure every nail, every hour of work, and every bit of electricity gets accounted for, building profit into the price right from the very start. So the real question isn't just what you'll cost out first, but what hidden costs you might be able to uncover now.